In a world where the intricate challenges of supply chain finance demand innovative and customized solutions to bridge the gap left by traditional financing, Artfine Earth Padarth Factor stands out. Welcome to Follow Startups. I'm your host Ankita Pahwa, and today we are excited to be joined by Saini Rajgopal, co-founder of Artfine Group. Her impressive 17-year career in corporate and investment banking also includes managing high-profile relationships with both large and mid-cap Indian corporates, showcasing her deep understanding of product knowledge and credit assessment. Tiny's exceptional background and sharp acumen make her a pivotal figure in advancing supply chain finance at Artfine. Hi, Tiny. Welcome to Follow Startups.
Hi, Ankita. Thank you for having us, and it's my pleasure to be on this podcast.
It's great to have you here, Saini. Before we talk shop, please take a moment to introduce yourself and share a little bit about your background.
Sure. So, so far as my educational background is, I'm a chartered accountant, and practically all of my career has been, I mean, till I started on my entrepreneurial journey, has been in banking. I've worked largely with very large banking institutions, which is the Citigroup and then with Deutsche Bank. Most of my banking career has been on the corporate banking side, where I've handled large corporate relationships and effectively managed these relationships from a credit angle, and had multiple transaction and deal experiences with these corporates. Towards the end of my stint at Deutsche, so totally, between the two institutions, about 17, 18 years of experience. There was a lot of structured stuff that we did for some of our clients, specifically in the trade finance part of the banking, where the clients actually found a specific solution oriented kind of product delivery versus kind of managing a regular product mix. So I think some of our inspiration to actually embark on an entrepreneurial journey, specifically in the supply chain finance space, came from that experience, to see that how you can actually provide solutions to your customers, rather than just providing just solving the financing or the liquidity part of it. So yeah, so that's been largely the background.
And thank you so much for sharing that. Now let's zoom in on Artfine. So tell us what specific challenges in the supply chain financing space motivated you to create Artfine in the first place, and how do your solutions address these challenges?
Sure. So actually, when we started off, for us, the target market, or the place where we saw a large opportunity, was in the supply chain financing space, specifically where the market, or the service providers, were largely the traditional sources, which were banks or the NBFCs, and there was a huge gap between what was required in terms of demand and what was actually coming in terms of supply. So if you actually look at it, Ankita, the supply chain finance market is quite large in India. It runs into lakhs of crores. But then the addressable market, or the market which is like actually catered to with the banks, is a very small part of it. A large part of it is actually probably either self-financed by the businesses, or probably they don't have an avenue to finance it. And so we felt, can we open up new pools of liquidity to address this market? And when we say new pools of liquidity, what we actually try to do is see how you can open up trade finance or supply chain finance to the capital markets. Traditionally, that is something which has not happened. It is happening in very small proportions, but we wanted to make a proper business model out of it. And that was practically the whole idea for us to form the Artfine Group, where initially as a group, we did more of advisory work, where we work with other institutions to see how we can help them securitize some of their portfolios, and actually convert a trade finance backed portfolio into a capital market instrument through securitization, which is basically pass-through certificates. Kind of, the initial 2 years where we actually saw success in that, we felt fairly confident that we could start our own entity. And that is when we actually went ahead and incorporated our lending company, which is Artfine Factors and Finance. We went ahead and took, it's a licensed entity. We have an RBI NBFC factoring license in this company. And that's how we started our own institution, which provides supply chain financing and which also then uses that portfolio to create a capital market instrument, which becomes an alternate investment option for investment. So
Lovely.
that's been the whole ideation.
So, Saini, we understand that MSMEs form the backbone of your business. So, could you provide further insights into your target audience and the different type of businesses or entities that benefit the most from your services?
So, for us, it's been a very enriching learning experience. Initially, as a bank, when you're working in a bank, what you are most exposed to is the anchor side of things, where you have a large corporate who's an anchor, and then this anchor has a lot of vendors who require financing, and so the anchor actually supports the vendors by approaching their bank to provide the vendor financing. But when we started our business, what we found is that while the vendor financing programs are there, a lot of vendors actually are not part of it. So there is only a portion of that population that gets addressed, and there are a lot of vendors who actually don't have access to this particular pool of liquidity. So what we felt is, why don't we cater to them? Because these are largely MSMEs. There are a lot of startups, and there are a lot of mid-sized companies who don't have access to this financing. Now, why they don't have access is very, very simple, yet, it's not very obvious. So normally when a small business entity, right, which goes to a bank or an NBFC for limits, there are two, three basic requirements. One is that they need to have at least 3 years of financials and profitability. And second is there is a requirement for providing collateral. Now, typically for small businesses, this becomes a constraint. So when they start a business, the promoter actually kind of uses his or her personal assets to give as collateral. But soon that is over, right? It's not an infinite source.
Hmm.
And then what happens is, when the business actually takes off, right? When there is growth happening, there is need for more working capital. But unfortunately, because of this issue, the increase in the working capital limits doesn't happen very easily for these businesses. So somewhere they get stuck and the business suffers, right? So that is the space where we found a huge gap, which we are able to address, because what we do is we use a very, very strong and good product called factoring, where we factor the receivables of these businesses. So for us, the target market, Ankita, is very clearly businesses who are selling to very good corporates. So to clarify, if you have an MSME who is supplying to AA, AAA rated corporate, or to a large MNC, right? So the quality of his sales receivable is very good. This particular borrower's own balance sheet or financials may not be very strong, right? And they may not have the collateral to offer to borrow more. But the receivable itself is of a very good quality. So what we do is, when we factor these receivables, we actually buy these receivables from the borrower and we give money in return. So what are they doing? They're unlocking their debtors or the receivables, and they're getting money early. So this helps them to grow the business, because then they can supply the next cycle,
Yeah.
because they've got the money before the credit period got over. Now this is a very standard thing, but where the differentiation comes is that, one, I don't ask for any additional collateral, because that receivable itself becomes my collateral. I've bought it from the MSME. And secondly, the MSME is not dependent on anyone else to get the financing. So he doesn't have to technically depend on on the anchor accepting this on a trades platform or on a banking platform, or being dependent on the anchor to introduce him to the bank. All those things are not there. He is directly sourcing financing for himself. So this is a huge plus for these kind of companies. And specifically now, of course, we know startups. This is a very, very thriving space. And a lot of startups today, if you see, whether it is in logistics or in FMCG or in various sectors, they are doing a lot of business in modern trade.
Hmm.
By modern trade, what I mean is platforms like Amazon, Flipkart, Walmart, all of these platforms, so many of them are there, where a lot of new startups are providing their services. Now, the best part is all of these are digitized, invoicing processes, because there are portals, and so it becomes a very transparent kind of invoice acceptance process, right? So if I'm able to provide working capital, timely working capital to these startups or MSMEs, they can actually multiply and grow their business much faster, right? So that is my target market when I'm talking about my factoring or the lending business. But my business doesn't end here. What I then do is also take this portfolio and provide it as an investment product uh, to a whole investor market comprising of HNIs, family offices, institutional investors, uh, in some ways even retail investors, as an alternate investment option. So that is the second part of my business, where I do a securitization and provide a continuous supply of investment products, which gives them a good yield on the money that they invest. So these are the two legs that we address.
That's amazing, and thank you so much for explaining this so nicely and so in a very comprehensive manner. So, Saini, does Artfine also tailor its solutions to meet the specific needs of these different industries like FMCG, logistics, or do you offer a more universal approach that works across all the sectors?
No, it's actually not universal. It's so the one of the things that we, when we embarked on this journey, we're very clear is one size doesn't fit all, right?
Hmm.
Every business has its specific nuances in terms of the billing cycles, in terms of the invoice acceptance process, in terms of how the payments actually happen, so on and so forth. So what we actually do is, it's not like I need to customize every deal, but when I do customer onboarding, I actually understand how their entire business cycle works, right? And then I give a solution or a factoring facility which actually ties in with their requirement of the working capital cycle,
Got it.
so that they are able to, so for example, if I give somebody money in the last 10 days of the credit period, it's not going to help them, right?
Hmm.
Similarly, there are also times where you have to factor in some very, very normal trade practices, like, having a small grace period, because commercially there are always some, give and take, in terms of there could be some, systemic stuff. So there could be a 2 3 day delay. At times there could be an average collection period that you have to arrive at. So these are some of the things that you come to know when you do a kind of a, billing analysis, a track record, and then you give a facility which actually helps the entity, rather than just giving, like saying whoever walks in, I'm going to give a 90-day discount. That doesn't work. So we customize some of these aspects so that they're able to get the money and they're able to use the money in a efficient way.
So, what sort of industries constitute the majority of your, target audience or the majority of your clients?
Sure. So, from an industry perspective, while we don't have any biases,
Hmm.
but certainly, so we are there across industries. Maybe some few negative industries we may not want to touch, but otherwise we are pretty universal in our approach. But I think in terms of actually achieving the success rate, I would say FMCG has been wonderful, because I think largely fueled by modern trade, because so many new companies are doing different things in this sector, and they're able to scale up much faster because they have access to, a large retail market. So FMCG has been one. Logistics has been the other one. As you know, there are so many logistics providers now solving different aspects in the logistic chain, right? So we have some clients who are actually doing the last mile, and they have a more tech angle to it, where they're managing the efficiencies there. We have clients who are solving the EV side of logistics. So again, there are different aspects here. The other thing is, on the infra side, is something infrastructure, and you could say infrastructure and construction. That's another area where we have had clients coming to us. There, actually, it's a slightly different requirement. So this is where it ties in, right? So the first part where I mentioned about FMCG logistics, these are all shorter credit periods, but volume based, right?
Yeah.
Whereas when you move a little and come into infra, these are actually chunky billings, right? So they are like, the invoice values are bigger and the credit period is longer.
Hmm.
So here, typically the industry has like a at least minimum 90-day credit period, because that's how the industry works. So
Yeah.
that's where I was coming about. How do you give the facility which is suitable for their requirement and industry?
Got it.
So I
Got
think
it.
this has been kind of the mix, but of course we have a lot of clients who are doing different stuff. But as I said, there is a lot of, and then of course the services industry is another one, where again we've seen a lot of impact. So there are a lot of companies who are providing specific software, or like we have a company who provides training software to all the large corporates. So it's a very niche business, right? But it's a service industry, and they have billings to a lot of the large banks, FMCGs, and so on. So the
Mm.
service industry is another one where again there is a very, very typical kind of a requirement, and it's a very good business.
Listening to all of these has definitely gotten me curious to get in on some of the names of the clients that you have worked with and the kind of feedback that you have received from them.
So, see, we have in the logistics space, for example, we have a client called Yatnavat Technology. So, this company is into the last mile delivery. They're providing services to Flipkart, Walmart, Instacart, and now they are expanding their customer base to many other platforms as well. In the FMCG part of things, we have a company called Computronics, which actually sells laptops and related accessories on platforms like Amazon, Flipkart. So that's been another one. We have EV electric vehicle service provider. This company is called Reinvent, which is again catering to companies like Instacart. So yeah, so these have been some of them. Then we have some very nice, interesting stories. So we have a company which is into making uh, Chinese sauces. So they are into this entire Chinese, foods which are ready to make. So you have these ready sauces which you can kind of mix with the ingredients, and so they are again. So that was a very beautiful story for us, because we are very proud that we've been part of their growth story. So this company, when they came to us, they were selling on Amazon and they were starting on Flipkart. But today, if I'm very proud that we've been part of their journey as well. So they are selling now on Reliance Retail, on Big Basket, on Blinkit. So
Wow.
they've actually expanded their entire sales base, and now they are doing so much with the other names as well. So for us, it becomes a very organic extension, because once a client comes to us and they see the value, then the more they start selling, automatically those clients keep getting added to the portfolio. So and for the client again, it's a fairly smooth process to get the limits increased, and to have more buyers added, because we are able to see the trade flows on a very
Hmm.
regular basis. So I don't really need to rely on anything else. I can see the money coming regularly, the billing happening. So it kind of ties in very nicely. So
Got it.
we grow organically with our clients, and vice versa.
And speaking of which, if I ask you to define the current stage of your business for the audience, what will that be?
So I would say we are somewhere gone past the early revenue stage, and we are kind of entering the growth stage.
Okay.
Yeah, as we speak, like I mean, certainly we are seeing this huge, I would say, burst in the kind of deals that we are seeing, the inquiries that we are getting, the sourcing that we are doing. So just to give a simple example, when we would have started 2 years ago, my typical facility sizes would have been anywhere. The smaller ones would have been, maybe 25 to 50 lakhs for a small business, going up to 1 to 3 crores, right?
Hmm.
But now I'm actually looking at a lot of deals which are 10 crores, 15 crores, 25 crores. So these are companies which are probably, 300, 400 crore top line, and are looking for growth capital, and have a good customer base, have a good track record vintage, but they need support on the working capital, because they've practically dried up their traditional, sources of funding. So that's the thing. And then, of course, as a business, it's not like we only do the small, deals.
Hmm.
We, as a business, we have the expertise, the technology, and the wherewithal to handle institutional or larger deals as well. So, for example, if I have a large company which is well rated and has a portfolio of receivables, subject to the pricing, I can solve for receivable factoring for them as well. So we are now also seeing these type of companies approaching us saying, can you do a 50 crore deal for us,
Amazing.
for a receivables. So
So
there, then I'm getting into a slightly bigger ticket size, and the investment or the securitization will also happen with an institutional investor. So it's like kind of moving the scale a little
yeah.
higher.
So Saini, are all these companies based out of India, or do you also have a presence beyond the borders?
No, right now our business is within India, but
Okay.
even though we are based in Mumbai, we have clients in the large metros.
Hmm.
So we have clients in Bangalore, Delhi, Chennai.
Okay.
For us, location is not a constraint. We would like to have our hubs soon in some of these cities as well. Right now, what we do is we are kind of handling that through our you can say origination partners.
Hmm.
So we have a tie with a lot of origination partners who bring us the deals from these other regions, and then we kind of handle it out of Mumbai. But soon we would like to have our hubs in some of these other cities. But to answer your question, right now the offshore part of it is something that we don't do on our books, but we do offer advisory services. So, for example, if
Hmm.
somebody is looking for an export factoring requirement, because we understand the product and we do have a good network with some of the lenders in that space, we do help our companies to get uh, those type of facilities as well.
Okay. And where's the heart of Artfine? Where is your office located?
So we are located in Chembur in Mumbai. Very recently, in fact, last month we took a second office in the same premise because our team is now growing, and
Now.
it's a nice thing. So the second office we've like kind of made it more like a customer experience center where we can have our customers visit us, interact with the team, because I think one important thing, Ankita, that we believe in is that for us it's not like a term lending kind of a product, right? Like where I sanction a loan and then we so long as you're paying, we don't meet, and we meet after a year or so. It's not like that. It's a very I would say intensive kind of a relationship, because you're going to bill every day, every month, right? So the invoicing is continuous, so the factoring or the discounting is continuous, and the customer is growing, so you keep I mean, I have seen cases where we've increased the facility size for a customer twice or thrice in a year, right? Because sheer the volumes have gone up and we can
Hmm.
see the flows happening, and it's a very convincing story, and why would we not want to do more
Yeah.
with the customer if it's working well? So for us, the interaction between my team and the customer is a very regular aspect, and it's not like I sanction and I see you after a year. It's not like that. So for us that becomes very important, and I think that is what keeps them also kind of to stay with us, because it's a very strong interaction on a regular basis.
Definitely. So, Saini,
Yeah.
are there any business numbers or metrics that you are, very proud of and would like to share with us? Any numbers?
So, whilst as an absolute number, these may not look very large, but then they kind of show a trend. So, when we started our first full year of operations, which was FY23, we had an AUM of about four odd crores, right? It's a small number. But then last financial year, that that kind of jumped 4x. And what we are looking now to do for this current financial year is actually more than 4x. So obviously, when you start on a small base, the jumps are larger. But then what I'm trying to say is that the numbers are multiplying faster, and also purely because of the way the business is, right? Our throughput numbers for last year was like we did 100 plus crores of disbursements. That's the volume that kind of goes through my system, because all my customers are growing. These are all receivables which are within 60-90 days, so there is a constant churn. The money comes and they redraw again. So it's a very robust business from a credit perspective, because uh, you are constantly in the know of how the business is doing,
Yeah.
because the flows are going through you.
Hmm.
And more importantly, because the customers, the borrower who's taking the facility from me, their billing and their flows, the cash flows are passing through us. We get to see how the business is performing. Like, very quickly, the early warning signs are very, very early, because, like, even if a single payment doesn't come or something, we know that there is some issue, and we are able to talk to the client and figure out. And frankly, most of the cases, it's got solved very, very quickly, because they've kind of explained to us, and then the money has come within a week or whatever. But it's a very, very involved kind of a process. So from a credit angle, it only gets more convincing as you go along.
So while we've already touched upon the credit, I want to talk about your revenue model. So tell us, how does Artfine monetize its services? Is it, through direct financing fees or commissions or any other approach?
So see, on our lending side, it's a fairly simple process. When we provide a factoring facility, we have a discounting charge. So basically, that's like a coupon, right? So when I do the discounting, I charge a
Hmm.
coupon. And when I set up a facility or when I renew it, there is a processing fee. So that is like a
Okay,
annual fee, right? Which is basically taking care of the entire credit evaluation process. So we have a processing fee plus a coupon model on the lending side. Now, as compared to a traditional NBFC, normally the book is built based on two things, right? So if a normal NBFC is lending, they would have equity, and then they would have debt, which is the leverage on the
yeah.
equity, and then they would build a book on that basis. In our case, it's slightly different. We have one more additional aspect to it. So while there is equity and debt, there is also, so the equity and debt becomes my warehousing capability
Hmm.
to do the lending. And then what I do is I actually package these receivables which I have, right, which are all AAA, AA receivables of the buyer companies of my borrowers. I take that, put it into a portfolio, and convert that. It's called securitization into a pass-through certificate. So pass-through certificate is a proper investment instrument. It's a capital market instrument in which people can invest in,
Hmm.
right? So corporates, institutions, HNIs, they can invest in that paper. And I pay a coupon on that paper because I'm raising that money, right? So I'm basically transferring those portfolio of receivables to the pass-through certificate, and they become, they earn the yield on that. So
Got it.
effectively, my business model is the profit that I make between my lending rate and the rate at which I am selling or securitizing these receivables to the investors. Now, here is where it is a win-win, because what happens is, there is, when I'm lending, right, the borrower is happy to borrow from me because they don't, I'm solving an access for capital over there. So they are happy to pay me a lending price, right, which is for the funds that they're utilizing. On the other hand, when I'm packaging this and providing an alternate investment instrument to the investors, again, it's a win win there, because today, traditionally in the debt market, the options that people have for investment are again the traditional products like
Hmm.
bonds,
Yeah.
commercial papers, FDs, right? And we know what are the kind of rates that you get on these instruments, or a debt mutual fund, which is again yielding a single digit, yield, which is quite low. So when I'm able to give an instrument which is actually having an underlying portfolio of very good receivables, right, of top corporates, but I'm able to give a yield uptick to the
Hmm.
investors, uh, again, it becomes a win-win for them, because it's a debt product, but then you're getting a higher yield for a good
Yeah.
credit portfolio. So, and what I make is the difference, or the skim between the two. So it's kind of, where I'm coming to say is, it's like kind of solving something for everyone in the chain, including
Hmm.
us.
So, Saini, let's talk investors. Tell us who's backing Artfine in this journey and how much capital have you managed to raise so far?
Yeah, sure. So, Ankita, I mean, basically, as promoters, we started off, the business for the initial, stage of getting the license and then getting the business off the ground. But for us, what was important is, so far we've raised about close to $2 million, and we are in a fundraising mode right now, specifically because we are seeing the whole growth trajectory in front of
Yeah.
us. Uh, but more importantly for us was two rounds that we did. One was an angel round, which was effectively a lot of people who are very senior people in the industry, both in the banking and finance industry, as well as in the manufacturing side of things as well. So these are industry leaders who have come in as angel investors. For us, more than for us, it was like a package deal, because not only did they invest, but also you get to learn from them. They provided us mentorship, and also um, open doors for us. So we have these angels on our cap table. And then in March 24th, recently, we also had a strategic investment by Unity Small Finance Bank. So they have invested in our company, where we also have a line of credit from them, and also we have a kind of a business collaboration where we originate for them the similar kind of deals that we do. So that is more of a strategic collaboration that we have done with the institution recently. So with that in the background, we are now looking to raise more funds, given that we are seeing a very good deal pipeline. And so we feel if we raise the money now, we'll be able to grow much faster, and we don't have to wait to take the growth multifold.
So, that's amazing, and I can't wait for that to happen. So, you said you have a growing team. Speaking of which, tell us who all are in your team and what's the co-founder dynamic like?
Yeah, sure. So, see, we are three co-founders. When we started off, all three of us are from the banking background, and we have a good mix of both the product as well as the coverage or the client-facing experience. But I think when we started off, the whole idea was that each of us would handle different parts of the business, and kind of, we of course sit together and collaborate. But if you see, our senior management again is very senior people, all of whom have been from the industry. So apart from myself, Arvind and Shantanu, as co-founders, we have like Mukesh Pandey, who heads our credit risk. He is a very senior person who has headed risk at RBL. He's a retired banker, and he's on our board as well. Then we have Shrikant Rajan, who is a very senior banking professional who was with Yes Bank for a long time, and he joined us as the head of business development. He again is on our board, and he heads the entire sales function for us. Mr. Altaf Baradia, who's our CTO, again a very seasoned banker who has handled the IT aspects for a bank. Is our CTO, and he helps us. He has helped us basically develop the entire tech engine for our business. Given that it's a very intensive business, we need a very good tech backbone to be able to scale, right? So I don't need to add people in the operations team, but actually kind of scale up using the tech capability.
Hmm.
So that is something that we do with the help of our CTO. And then in terms of the team itself, it's a very young team. We have a lot of people who are I would say people who are with maybe about 3 to 5 years of experience, who handle some of our functions and operations in the credit function, in the sales as well. But then we also have some seasoned people who have joined us from the industry in the sales function and in the credit function. I think what has worked for us is I'm very proud to say we have a very diverse team. So we have an excellent gender mix in terms of the people that we have. We are about 25 people in the team now, but it's ever growing. We almost have an addition, coming up, additions happening every month. But what's more important is we have a lot of the young crowd, a diverse crowd, and we have people who have joined us for very specific. I would say it's like again there. A lot of times we see a win-win. Like we have people who come and learn a lot here, who are interested in the banking and finance sector. A lot of our employees also have aspirations to study further. So what they are learning on the job also helps them, gives them a practical hold
Mm.
over what they are, learning academically as well. We have some seasoned people, as I said, who have been there, done that, have excellent experience, and are like bringing best practices to our business. So again, it's a nice, healthy mix of different backgrounds, different, I would say, motivation to join us. And yeah, I think we have a nice enthusiastic team out here. Very happy to have been able to find such people join us.
That sounds lovely, and it's even more lovely when when you look at a co-founder talk about their team in such a passionate way and such a in such an encouraging way. So hey, speaking of that, are there any key positions that you are actively looking for at present?
See, as I mentioned earlier, we are looking to expand our presence beyond the Mumbai hub, right? So while this will
Hmm.
remain our head office and the main center, but we have clients which are outside of Mumbai. So we would like to be more closer to our clients as we grow along. And certainly our presence in some of the other metros is something that we want to have. So we would be looking for maybe more of relationship manager sales resources in some of the metros who would then create the hub there for us to have more client coverage and interaction over there. So that is
Got
something that certainly we are. It's
got it.
like a priority for us.
Great. So, Saini, as we look ahead, tell us what should we anticipate from Artfine in the next, 3 to 6 months? What are your top priorities? And, is there anything that you are in particular looking forward to?
I think for us, the progress has been that with every milestone, the deal sizes have been bigger, whether
Hmm.
it is on the lending side or on the investment side. Like, so for example, we had our last two PTCs, which were fully bought out by platforms. So, I mean, for us, what I mean to say is there was hardly any distribution effort, right? So there was like we got a PTC out, it was fully subscribed on day one by some of the platforms who distribute alternate investments. So certainly we are seeing a huge demand in this space. So we want to do larger ticket sizes or larger issuances as we go along. So that's a natural progression for us. So to just give you an example, from a 3 crore deal to a 5 crore deal to a 10 or a 15 crore deal. That's the size expansion that I'm
Hmm.
looking at in terms of ticket size. On the lending side, we are very excited to do some of the larger deals with larger corporates. So not so whilst we continue to build our MSME and the mid-sized corporate pipeline, but there are also very interesting large ticket deals which are there in our pipeline, which we hope to convert. And that I think for us will be a milestone in terms of then jumping the AUM to a multifold kind of a number. So that's something. So these are the two things, and then of course the third would be having the equity also come in. So we are in the process. So we just feel that with the additional equity that we are looking to raise, once that is in, it gives us a very strong footing to go ahead with some of the tech developments that we are wanting to do. So we already have tech, but then tech can always keep getting better
Yeah.
and more smarter and more efficient. Build our team, as I mentioned, and of course do more businesses. So we want to increase our bite size. So that's what is our priority for the next 6 to 9 months.
So many exciting things planned, and I'm definitely looking forward to having those conversations with you in the future.
Sure.
We are totally gearing up to promote this video, this conversation to large enterprises, investors, tech giants, and a broader startup ecosystem. Is there anything specific that you would like to mention that you think could help you find any external assistance or support that you are looking for? Please let us know. Like, consider this as your call for support.
Sure. So I think the first and foremost, Ankita, I think the way you've gone about the whole podcast, certainly this is like this initiative will certainly help create awareness about what we are doing, right? And when I mean awareness, it's like we are addressing two very large markets. So the
Yeah.
more the people know, the merrier, because then they know that okay, somebody is providing this solution, and so why don't we approach them? So it certainly helps open doors for us with a larger audience. That's number one. Second is, I think, in terms of uh, like when you're in the process of raising funds, you're like speaking one on one to people. Here we are hoping that this gets across to a larger set of investors on that front as well. And more importantly, I think for us, the whole I mean, there are in supply chain, there are a lot of people who are doing different things, right? So somebody is solving purely on the tech side, somebody is solving on purely on the lending side, and then someone is doing this whole platform kind of stuff. So for us, I think the more people we get in touch with who have these requirements, and whom we are able to collaborate and do more. It may be small, it may be large. So even institutional, kind of clients who are looking at securitizing portfolios, or who are looking at building their, lending portfolios, we are open to collaborations, right?
Hmm.
I think factoring is a space which lends itself very beautifully to a lot of co-lending slash, a joint, a participation kind of structures. So we would be very happy to collaborate with other institutions as well, because that's how the market grows, that's how the awareness grows. And I don't think we see that as competition. We see that as more as an uh, initiative to expand the market and make it more worthwhile for all of us.
Great. And with that, we're almost reached towards the end of this conversation.
Um,
So one last thing before I let you go and we move on to a rapid fire round. I want you to take a moment and make a wish for your startup that you hope comes true in the near future. Any wish, and that wish has to be made out loud.
Wow. Okay. So whilst, as they say, wishes were horses, there are many of them. But I think first, the foremost that we have is we are looking for growth capital. We have an excellent pipeline. The business is doing well. We are not a business which is, a burn kind of a business. We look to do profitable deals. We look to do meaningful deals. So I think for us, the funding coming at this stage will certainly help us, catapult our growth into a different league. So I think the faster that we can find the right suitor to provide us the funding, the better for us. So that I think will be my foremost wish, because
Great.
with that, a lot of things fall into place automatically.
Yeah. Okay.
Mm.
Awesome. So let's start with a quick rapid fire round. I've prepared 5 questions for you. Very quick answers. Are you ready?
Mm.
Okay.
Yep.
Okay. So, Saini, question number one, a book or any podcast that you would like to recommend that has greatly influenced your career or your life in some or the other way.
So, okay, this is a little not related to business, but I would think as entrepreneurs, I think there are a lot of times when it's a slightly long answer, but I think we all need to also somewhere reconnect with our own self. So I think nowadays there are a lot of podcasts which also help you kind of, to I would say go a little internal in terms of what you want to do, what your lakshya is, right? What your aim is. And I think as an entrepreneur, your eyes have always to be on your ambition, on what you want to do, and that's how you keep motivating yourself,
Yeah.
right? So I would think some of these podcasts, I'm not able to name a specific one, but I think
Hmm,
some of these certainly help and inspire in your entrepreneurial journey over a period of time to keep that fire burning. So I would
definitely. Yeah.
certainly recommend that.
Okay. Question number two. Which productivity tool or app do you find most helpful in your daily work?
Okay, so certainly I think it's a very common thing, but WhatsApp, I think,
Hmm,
is something that I think we all use very, very conveniently. I think it still is one of the most efficient tools for quick
that's true.
communication.
That's true.
Yeah.
Okay. Question number three. A fun fact
Mm.
about you that most people don't know yet.
I think some of the people know, but yeah, I mean, I really love fine arts a lot. So whether it's music, dance, and a lot of cultural stuff, that kind of really peps me up. So I do try and keep myself connected to a lot of these things, and it
That's
really
sweet.
brings a smile on my face. Yeah.
That's sweet. Okay. Question number four. What is your favorite quotation or any mantra that you live by?
So I think a quote which I heard recently, which like kind of really inspired me, is the only thing that comes between you and your target or your lakshya or your ambition is actually you. So if you can solve things at your end, and not blame it on any external factors, I think you can get closer to your ambition.
That's very deep and a very good one. Okay.
Yeah.
So last but not the least, what advice would you give to other entrepreneurs looking to venture into the financial services industry? Any one piece of advice?
So for me, I think important is that whole sustainability thing, that can your business survive through credit cycles, survive through a number of years to then continue to be a something which can run on its own for a longer period of time. I think That is very important, and not focus on quick results.
With that being said, Saini, may Artfine keep pushing boundaries and paving the way for a more seamless, efficient, and inclusive financial ecosystem. All the very best, and I hope we meet soon again to discuss the next best thing that's going to happen.
Yeah, thanks, Ankita. It's been great. I think I've loved answering your questions. It's As an entrepreneur, we are all passionate about what we do, and it's always a pleasure to talk about it. And the way you put the question, I think I've been able to, explain our journey to you. And I'm very happy for being part of this, because it only helps this message reach a very large, nice, discerning audience. And I hope that, this brings us in touch with more people with whom we can collaborate and, synergize.
So if you'd like to stay updated with the latest developments and business insights from Artfine, make sure to follow their channel on follow.us/startups. And thank you so much for watching. I'll see you in the next episode.